Good morning. Welcome to the morning brief of the US stock market. It's February 8th. It's 8:40 a.m. Eastern Time. I'm Rich Posson for Critical Point. Let's begin the discussion of this K economy, of why Biden is saying go all in, you can't do too much, go big. And there's many economists behind him. But there's some economists that say, yes, you can do too much. You should worry more about inflation. And they're obviously less worried about people. They're less worried about today. They're looking farther out after you get a full recovery. What are you then going to do? Valid questions, but frankly, in my modeling, it's saying, yeah, go all in, just do it, okay? And here's some of the examples of why, or that we do have a K economy. Here's your restaurants lagging way behind the grocery stores that have actually done well, okay? They're doing better than what they've done on some of their seasonally adjusted long-term trends, okay? And you can find this in daycare, okay? And there's all just many sectors of our economy. It's a little bizarre to me that our economic indicators are doing as well as they are, and therefore the stock market doing as well as it is. It's almost like our economic indicators are kind of manipulated, if you will, to just show the better sectors of the economy. Just a bit bizarre to me, all right? So we do have issues, we do have problems still with our economy, but at the same time we are working through them, and I think the stock market is saying, well, let's be optimistic and try to go with that. Ultimately, I think Biden will probably get what he's looking for here. I think the market's going to like it, but how much is that dialed in near term? Anyway, something else has showed up over the weekend. There's a technical analyst out in Missouri, Helen Meisler, and she showed up this, or thrown up this chart here on Twitter. And basically, it's the NASDAQ advanced decline line. And I didn't realize this. Look how long that advanced decline line declined from late 1990s all the way into the recession, then the Great Recession back in 2008, 2009. Then base build through the bull market, but now it's breaking out. Now, I suspect this has no predictability whatsoever, okay? But at the same time, it's rather intriguing to see this long sideways action, quiet base building. Ought to be perhaps extremely bullish for this indicator, and now it's breaking out, suggesting it's on its way, the train's leaving the station, and it's going to go. Well, if that's the case, is it possible we can have several years this decade where we do the opposite? Instead of going down, it goes up, meaning there would be more advancing stocks, more days, more weeks of more advancing stocks than declining stocks. Seems like that would be net demand. Seems like that means the NASDAQ does have a chance to being the leader of the entire group, maybe, of the stock market, or it's at least reflecting the stock market's going to do very well. I don't have answers for you on this, and again, it may not have any predictability at all, but at least I keep reminding myself there seems to be some evidence of NASDAQ outperforming the S&P 500 and Dow Jones for quite some time here, and wonder why wouldn't it continue, because it is our newest companies. Yes, it is just high tech, but it's our newest companies and whatnot. So something to discuss here in the future. All right, let's go on with the stock market here. I'm going to try to keep this as short as possible. This is the weekly chart of the S&P 500 futures, and since it's weekly, it's basically showing you the same thing as cash, okay? And obviously we know the crash last year, okay? The market fell 35%. What had I said years in advance? We were due for 20 or 30% decline. It could be minus 15 to minus 50%, but ideally around 20 or 30. Well, we got a 35% decline. What did I say for years in advance? We were due for a top in 2018 to 2020. We should have a recession. It should be over no later in 2021. We should have a bear market sometime during that time. Should be over no later in 2021. And the point is, it came in place, spanning just 2 months, not even full 2 months. February, March, all over. Long-term bottom. I triggered a level 1 bottom 2 days after the actual low, and also called a long-term bottom as well. Then we had an additional incremental long-term buy in September, and now we just triggered another one. For those who want to be more aggressive, want more buy opportunities, we said buy during this running correction in November, okay, off of level 2. And then, of course, for those just using this to trade during the year, give them guidance what the whole market's doing as maybe they trade in stocks. Well, of course, this was a good buy here, and then you had some sales, and then you had another buy, and you had some sales, another buy, a sale, and another buy. And basically what we're saying for everyone that's following the stock market, consider they're going to buy this stock market for 6 to 10 weeks, going into a level 2 top late March on into sometime April. It'll drop into a level 2 bottom probably sometime in April. It looks like it'll be short and brief once again, only 2 or 3 weeks decline maybe. It looks like it may only be a 3 to 5% versus 3 to 5% decline versus say a 3 to 7% decline like with the level 1s. So if you're looking for a larger correction, ideally it won't show up until May, June, July, August, when we'll get a level 1 top, the market will follow into a level 1 bottom. And unless something changes along the way, you can see these tops are coming in very close to bottoms, meaning there's very little time to decline. Well, that creates a definition of a much larger trend of higher highs, higher lows. That makes sense because we think we're in a long-term bull market. Now, what do we have for upside objectives here? Basically, I'm going to be a little more aggressive, maybe too experimental. You know that I like on the technical side point and figure charts. Well, to use point and figure charts to come up with upside downside objectives, normally you need a sideways moving market. This market hates to move sideways. It moves up most of the time, drops briefly, and then just continues to move higher. Well, I've decided that's like a lot of the commodities with V tops, V bottoms, and they don't give us nice trading ranges for tops and bottoms and the processes and so forth. So I've come to the conclusion this market has been under accumulation most of its history, and it may have been an accumulation since the low in March all the way up to now. And I said, well, how can I create a point and figure chart that looks at these fluctuations along the way and use the whole period? And the answer is it comes up with an objective from last week's low of maybe around 4,400. Now, it's not suggesting that we will see that by this next level 2 or the level 1 during the summer. It may wait till later in the year to get there. Maybe this market's going to slow down, stall out. But it is, I think, feasible to see 4,400 at least by May, June, July for that level 1 top. We have an old trend line here of support that's acted as resistance. So this week it could still be resistance around the 39.70. So we might want to watch out for that. Now, all these little pops and drops along the way in these level 2, level 1 trends are level 3 uptrends, downtrends. It tells us they normally occur during a month. You get one of each during a month. You can get up to 2 tops or bottoms, okay, or at least one. And therefore, buy signals can occur once, twice during a month, okay? Same for sell signals. Well, it looks like the market should top for a level 3, so we could see a little negative reversal profit taking this week. It would not bottom to next week. It can stay up into next week and then drop next week, and then still move higher. So we do have to be on the lookout now for a little more fluctuation in this, a little bit of profit taking. You have the 5-day or 5-week average as nearby support, 38.15, but it's a live average. And don't get excited if during the week it goes to that average. Sometimes the average really doesn't work very well relative to the low and high of the week. It works better of seeing how did the week close relative to that average as a clue of how good is the supply and demand, or do you even have supply and demand, some clue of either direction. Okay, that's it for our weekly chart. As far as I'm concerned, it's up and away into late March, early April, if not into summer. And yet we can have a little fluctuation this week into next week. So now I'm going to flip to the daily chart, trying to keep this as short as possible. Whoops, I should have stayed on the SSO. Here's your cash SSO. We do have a little bit of a gap here, so it's a warning that might pull back the next few days and fill it. But the trend was up. It was solid. It was looking very bullish. However, it's also quite overbought. It's extremely overbought. But I'm concerned this extreme overbought means we're going to get some false sell signals and we need a little overbought later. That's a technical concept. That's not a fundamental concept. 5-day average is nearby support here. It's strong. It's looking at an uptrend. How about that big gap we spoke of last week? They're going to have to bring this all the way back to below 95 at least to get them excited about thinking of that gap all the way down to 93. Otherwise, all you can say is the trend is up. Okay, now here's our daily S&P 500. We see the level 1 top along with level 2, level 3. We see level 3, level 2, level 1 bottoms. We correctly called that back on Monday. I'm very proud of that. I'm sorry that it didn't last longer. I can see how people would have said, oh, sell, and it's going down for February. And the seasonal players were saying, well, February is normally a poor month. And the seasonal players were saying, oh, January finished negative, so you got to be nervous about the whole year. And I said, nah, I don't think so. Okay. And it looks like we're right. I realize we're not really seeing the pickup in daily open interest that I would have thought. We need to see Friday's open interest. It does look like it was a little more short covering. It looks like they sold and didn't really buy back everything, but I think they were upset last week and they were buying back. And unfortunately, it may have been more buybacks than necessarily net new demand here. But I think there's more net new demand coming. I agree with some analysts saying there's lots of retail money yet to come in here. The little guy out there is quite excited. He's too late once again. He's been dragging his feet once again. And we do have to worry the little guy can be the sign of a top. But I'm still not seeing signs of the bubble that everybody's talking about. I just don't believe it. At any rate, the market might bump its head near this trend line or any of these kind of highs that you can draw your own line with. 5-day average is nearby support, okay? Coming in at around 38.56 right now on the daily. It is extremely overbought, narrowing spread, so it can roll over for a sell signal. So it is in agreement with the model that this week we got to look for a level 3 top. And it may top as soon as today. I think it's going to take a little bit longer than that, frankly. But don't be surprised we get a negative reversal day, down closing day. And don't be surprised they then follow through for a few days. If they start selling this week, unfortunately, they can continue to sell into next week before we get the next level 3 bottom. We don't have much for upside objectives here or downside objectives. One objective is because it went to a record high, we're saying it ought to go to 4,000. But that does not mean it's going to do it with this level 3 uptrend. It doesn't even mean it will do it to next level 3 uptrend. So you still have to be concerned this market is a little high priced, overbought right now. They are going to sell sometime this week into next week. Okay. That's all I've got for you. The trend is up. That's all I can tell you. You start seeing trade maybe below the Friday's low at 38.60. If it does that today and tomorrow, it could be a level 4 bottom. They put it right back up, but you'll have to consider they won't put it up much because that could also be a sign the level 3 trend is turned over and they're going to sell into next week. So I would say a close below 38.60 in the March futures is a sign the entire stock market, cash market, is probably ready to go down somewhat. How low will it go? I don't think it'll go below this line. I don't think we have to worry about it going below 3,800, frankly. It gets that low, we'll have to look at some of that gap stuff and see what we have for that. Maybe we can come up with a little bit lower. That is your downside risk, so you could be very discouraged to get back quite a bit of profit, but I think it'll just be another buy. I think the market's going higher later. Level 4 wise, yes, it's due for a setback today or tomorrow and then back up again. I can't get any more scientific or detailed than that. We'd have to be online all day long and watching it. Quickly, for some of you interested in outside markets, trend is down, I believe, into March for the bonds and therefore up for interest rates. I think the bond market is saying, yep, we're going to have a good growing economy. We're going to keep printing money. The money's going to flow. The job's going to get done one way or another. Yellen's already saying, no crash, no bubble for a long time and all this. Yellen's even saying unemployment could be back to full employment by next year with this $1.9 trillion package. So they're really going to push it, really go hard. And they may be right. That's going to be one of the fastest drops in the history ever, because normally under the 9-year major long-term business cycle, unemployment will come down slowly for several years while the stock market just keeps marching up all along. And finally, when we get to full employment, unfortunately, it's about over for our economic boom. If we see this sudden drop to full employment by next year, I will not say something's wrong. I will still follow that major long-term business cycle. All right, how about on the dollar here? I'm looking, I think you can probe the sell side of the dollar, but I'm not convinced it's truly topped yet. It may have topped last week, the earliest allowed, but it doesn't have to top to sometime this week. Moving on to the gold market. Looking for a bottom here. I think it's okay to keep nibbling buying at gold, but I don't think gold really wants to do much of anything for quite a while. Bitcoin, I was going to buy a little sample example for myself, and then I said, why do you bother with those things? Stay in the stock market. So I didn't buy it, but I had made a forecast it was going higher, and it is, and it's now, for all I know, it's going to 50,000, above 50,000 here in Bitcoin, but it's not going to top out to sometime in March. That may relate to a lower dollar by March, but then maybe we'll get a little bottom in the dollar. Crude oil, I think, is telling us it's okay. The economy's doing great, but crude oil should top in a few weeks here and give a little consolidation, but I don't see anything all that negative and bearish about it. On the NASDAQ versus the S&P 500, actually hanging in here pretty good, showing a little relative strength that maybe they like the NASDAQ stocks better than the S&P 500, but I'm very comfortable. I'm like 80-90% S&P 500. I'm okay with it but I also got leverage. I'm going to make good profits no matter what. All right, that's my wrap up here for morning brief, and basically I think there's more upside to come, but we do have to consider there's going to be a wave of selling sometime this week and the next week, but it's only going to be a little retracement, a little setback. I think the more important trend is lease up for 6 to 10 weeks. It's going to take them that long to get enough bought for at least a level 2 trader to cause some kind of setback when the level 1 trader may step in and say, oh, buy it. It's another dip. We are in a long-term bull market. Manage your risk relative to others. Stay safe, stay healthy. Have a great day.